Good morning and welcome to Trading with Larry. It's Larry Benedict, joined by my partner in crime, Eric Shamalov. There he is on the right or left of your screen, depending on how you're looking at it. Good morning and quiet day, quiet Monday yesterday. S&P volume ran at a third of average daily volume. Um, I really have not seen that in a really long time. E-mini S&P only traded about 830,000, well below the average. And I think we're in waiting. Are we waiting for Jackson Hole on Friday?
I suppose so. I'm
I
not
guess.
sure.
That's a long time to wait. What's good about some of the strategies that we have at the Opportunistic Trader is that we have strategies to take advantage of that. Our best product over the last 5 to 6 years has been our spread trading product, where we sell S&P put spreads and SPX call spreads at zero DTE with 1 day to go. So when you have really low volatility, you're able to make money in that strategy. The only problem with that strategy is pricing is so low that there's not a lot of take. So, our win rates are up above 90% on that recently in our last like 25 trades, but we're not able, we're taking out of the market 1 to 2 points a day. It's a slow grind. But it's a great product for times like this. And then we have other products across the suite of our products that are really, really good, like our zero DTE product, which really thrives during higher volatility and bigger market moves. So we can trade in that. And then we have a product, LOT, the Opportunistic Trader product, which is really our core long option product that does very, very well in high volatility. That's been kind of stagnant over the last few months, obviously, because of what we just talked about. But January, February, March, that product lit it on fire and got us off to like a really, really good start. So, we have different products across the suite of our products that can really make money in all different types of environments and makes us very different than pretty much everything out there, because most of the strategies are very, very similar. They're also very, very bullish, and they don't know how to trade the downside. So I think, our products are doing a really good job this year. Every product is up. They were up bigger. They're still up. The spread product is slightly lower, but really very close to unchanged, and have a lot of promise for that for the end of the year. And, just looking at the tape, we have one of those days again where you have the Dow up, Nasdaq down. I don't know if that'll flip on the opening, but it's weird. Like, can
We're going to get 100 flips today, right? That's been the market over the last few days. Every 30 minutes, there's a rotation.
really? I mean, I haven't been following it that closely. I try to focus on one of these markets to capitalize, but and we really don't trade the Dow. The Dow is very difficult to trade. Not that liquid. Trades about 1/10 of the volume of the E-mini S&P, so it's tough to trade that, or tougher to trade that. You can, and I had some friends at the beginning of the year, a trade that we've looked at, trading German DAX against US, buying Europe over US. Those are not that liquid, but liquid enough for our subscribers to trade the kind of size that we're trading. But to be a big, big hedge fund or a large institution, it's tough to maneuver size or quantity in those types of markets. So, there's a lot of different things we can do. And when the market gets like this, the hardest thing, and it's funny, I was talking to Touchdown behind me with his 6 monitors over there. Just want everyone to notice that. He actually asked me for 3 more monitors yesterday. I don't even know I don't know what it's about, but he wants 9 monitors now. So we'll see. We'll see. He says he needs them. So if he needs them, he'll get. I said to
The
him
more,
yesterday.
more, the more monitors, the more profitable. That's what they say.
Exactly. I don't know. I used to trade on one. I don't know. I had like, but you know what? The problem is like when I had my hedge fund, I had like, at that time, I had like, I don't know. You don't even need that many. I had so many monitors. I probably had like 12 or 16 or something. So he saw a picture of me with that. So he wants to have more monitors than me. So he counted them and now he wants more. So whatever. We want to make him happy. But the reason why I brought it up yesterday is I turned to him, because I'm teaching him, all about options. And it's funny when you do options the way I have for the last 40 years, it's so innate. Like, I can price anything. I could see anomalies in the market. I could see mispricings. And I'm trying to just show him stuff. And it's hard to realize that it's really hard to basically get the grasp of options that quickly. So the good thing is, we're here to help on that. But the point of
Okay, let
the
me
reason,
test you. Let me test you, Uncle Larry. What
no,
is the
I'm
straddle?
too early.
Without looking, what is the straddle this morning?
Well, I have the 40 straddle on today, so I'm cheating, but
Uh,
I'm saying it's higher than 40. It's 47. So the 45 straddle is probably $20, 20 and a half.
less.
Mm. Where is it? 19?
19.
18? Yeah,
19.
whatever. So that's pretty low. There's not a lot out there. Nothing's really going on today. But back to Thomas, and a lesson that I want to, sort of go over today is like yesterday, we came in for our product, the lightest that we've been in a while, right? We had a decent trading day, but really couldn't move the needle because we were light. And then all of a sudden, I'm like getting into this, I'm getting into that. And I turn to him, I go, one of the hardest things to do as a trader is when it's really not that busy, when you're sitting in front of your screen, not to see things that you want to jump on. And the next thing you know, I had like 5 new positions on, and I'm like, you know what? I gotta walk around the building for the 19th time. Some people that know me know, I walk probably 10,000 steps a day. So I took a little walk and got out. But as a trader, and over the years, going back to like when I was on the floor, the hardest thing is to stay out of trouble. Trades will come to you, but when there's not a lot to do, you got to sit on the sidelines. And it's funny. We've been running a short position in Palantir, and today we're actually long it. It's down. It doesn't act well. Still probably has a little bit more downside, but we kind of flipped around on that position. With defined risk. Just buying some calls. But
Yeah, I knew you were bullish yesterday. I knew
I'm not bullish. But why do you say I'm bullish? I'm so not bullish. I'm actually
you're
capitalizing right now.
incrementally more bullish.
Okay, I'm bullish. Okay, that's why I sold the straddle. The straddle you're quoting, I sold at $34 yesterday.
You're not as bearish as
So
you were 2 days
that's
ago.
a great trade. I don't have to be bullish or bearish to do that trade. That trade is just capturing a non-movement. I'm not bullish or bearish. I don't listen. I mean, you're all hyped up or whatever. Now all of a sudden you've turned bearish or whatever. I don't even know if you're bearish. But the bottom line is you got 1 week left in summer. Okay, you have the lightest volumes that we've seen of the year, literally of the year, counting any time in the year during a period of the last week to two. How do you think things are going to get more interesting right now? I'm just, I mean, we're literally, I mean, we have minutes of the Fed tomorrow, which I have a long bond position, okay, and I suggest that, okay, because I think they're actually going to show they're a little bit more dovish. So, I think that'll be interesting. And bonds got up to 435 from 318. Now these aren't huge moves, but inside the bond market, they're pretty big. And now we're heading back down, and we're at 431. And probably the next stop is 4.25. And then maybe we do 4.25 right before um, Jackson Hole. And my question to you, honestly, is you think this guy is going to be hawkish or or
The
not?
minutes, no.
I'm
The
asking what you I'm asking what you think. That's what I'm asking. I don't need to beat around the bush. Just tell me what you think he's going to. Is he going to be bullish or bearish on rates? On what do you think actually?
You mentioned two things. The minutes, I think you're right. They're going to be dovish because I don't think they incorporated that PPI that came out last week, which was horrendous. 3.7%. Market was expecting 3. Um, now the mantra, and rightfully so, is that companies are hiding costs. They're not passing them through. But we showed that Goldman report yesterday that they're estimating that basically all of these costs are going to pass through to the consumer towards the end of the year, which means we'll see it in the CPI. So now Powell has that PPI um, on the books, right? I'm sure he saw it, right? I'm sure he knows that that's what drives the core PCE with a 2 month lag. It's not like we're the only ones that know it. So I'm sure he understands the political climate that Trump is trying to get him out. Um, so is he going to be bullish or bearish on at the Jackson Hole meeting? I think he's going to say what he always says and kind of kowtow around. We need more data. We're going to see and blah blah blah. I almost think it's going to be a non-event. Where I think it's going to be an event is uh, in a couple of months. I think we need a couple of more CPI reports, and those CPI reports are going to need to show an uptick in inflation, just like the PPI did, to really change the course of the market.
Yeah, but let's think about this. We only have one CPI and PPI before the Fed meets to cut rates. So the bottom line is you're not getting a couple, and it's going to take months to seep into the consumer because, like we've discussed before, Mercedes Benz, BMW car companies are not passing on a dollar of that cost to the consumer. So, it hasn't, hit yet. And the bottom line is, PPI was off the chart bad. Maybe it's not as bad next month. Maybe they absorbed a lot of the costs for these original tariffs in that number. And maybe the number gets a little, easier. I don't think it's going to be great by any means. And definitely it's going to hit the consumer. But I don't think that this cutting is off of basically that itself. I think this is very, very different, and I think I
No,
think
they're probably the market is pricing in almost a certainty that they're going to cut in September.
I thought you
I
said it was
think
down to 80%. Is it
80,
80?
3% yesterday. That's almost a certainty, right? It was at 95%. It's at 83. Maybe they're a little bit less certain.
Why? If you think they're going to cut, that's not a bad trade to make almost 20%, probability. That's not a guarantee. There's room
Yeah,
in it.
we've seen Treasury yields do the exact opposite of what the Fed meeting was all about. Like we'd see, like last year, we saw the Fed cut, and literally on that day, that marked a short-term bottom for interest rates. Like interest rates would rally on the news. So maybe we get that. Maybe the market kind of looks past the September meeting and starts looking forward to the November meeting. Um,
Maybe. I don't know. What is priced in for the year? Like, is there another two after this, or is that, like that's really what we got to be focused a lot more on is whether or not that is going to happen. Because, like you said, this is an 83 percenter, so it's pretty much priced in. The question also,
they're pricing in a 25% chance of 2 rate cuts by December. 25% chance.
two more or
So
total of two?
a total of 2.
Oh, I think they could get that without a problem. I think that, I think we're touching on, I know people will probably throw stuff at me on screen, but I think we're touching on the beginnings of a slowdown and potentially the beginnings of a recession. I think that the tariffs are really throwing the market into chaos. We're not seeing it. Listen, it's not, are tariffs affecting us? We're trading. It's not really affecting us, but it's definitely affecting small manufacturing businesses across the country and around the globe. Nobody really knows what's going on. And, right now, Trump is focused on the Ukraine war with Russia. So, there's not really anything about tariffs and there's not any kind of crazy tweeting. He's trying to, I guess, solve this problem of the war, which, I was thinking about it last night, whether something,
Where do you see recession?
I just
Where do
see
you,
I think there's going to be a slowdown in employment, and I think there's going to be a business slowdown based tariffs. You know, I see a little bit of it now. Why would it surprise you if the unemployment numbers got worse? They probably can't because he fired the person that put out the bad number. So probably the new person won't put out the bad number. But I definitely think there's a slowing there in a big way. I think job hirings are stopped. People, especially across the manufacturing sector, services as well a little bit. I mean, can Walmart not pass these price increases on every product they have onto the consumer? I mean, I think things are slowing. I don't think you're seeing it fully at this moment right now, but I think things are slowing. So we have to wait.
I'm more concerned about just the technical picture in the market where um, uh, there's a lot of price action underneath the index that typically that I've seen over history lead to a little bit of a pullback at least. But I'm not seeing like signs of recession yet at all. I mean, small business optimism indicators are up and have been trending up since the lows of this year. Um, I mean, I don't know, maybe a little downtick in consumer sentiment, but small business
Yeah, but what
optimism is
about
growing.
what about the employment numbers? Are they really real? You know,
Let's say they're not, then why pay attention to
um,
them at all?
because you kind of have to, and that's what we do. But the bottom line is, listen, I just see a very slow market. I see, I see no, I see things that don't make sense to me. Okay, let's talk about, you know,
I'll show you a couple of charts that don't make sense to me.
well, let's before you show those charts, let's talk. Why do you think oil is going down? I know you're still bulled up, but it's getting close. It's getting closer to the under 60 handle. Or in the 61 handle, down a little over 1% today. I do not like it, and I don't like it for a number of reasons. I think there's slowing growth, like I said before. I also think that it's funny that, like, what do you think it means when these countries get into
I
it?
got to make a decision on oil today. It's like
You
right at my break even.
What do you mean?
I bought it at 61.92. It's right here. Should I sell or should I keep, Larry?
I'm short it, dude. So I'm long bonds, short that. I've said that for a bunch of days. And today, if oil goes about 50, 70 cents lower, I'm going to add to the position because I do think that it's going to trade through. Um, but I don't want to get too aggressive yet.
Yeah, typically, like when you want oil trending with the S&P. I mean, that's been historically what we've seen in strong economies is oil trending up with the S&P. So I see your point there.
Oh, I mean, I don't really have a, I don't really have a big point on it. I just, I just think feels, it feels weird. It feels, it doesn't feel like it wants to rally. And I think, it may not be a straight shot down to 60, but, I think we work lower. Weird market this morning. It's Nasdaq's really leading us lower, and it's funny because somehow Nvidia is up again. It was up yesterday, big. It's up today. I read this headline. First of all, China has said they're not buying Nvidia chips. None. Doesn't matter. Now Nvidia isn't selling the H20 chip. They're spending all this money making a new chip, this Blackwell chip, to sell to China. Like, I'm not understanding why do we want to sell to China? Why do we want, like, it's funny, Sam Altman yesterday said that they're ahead of us in the AI race and watch out. Okay, on top of saying the market's in a bubble and other things. So why are we selling them? Why are we selling them these chips? It's weird to me. Like, their business is booming, right? Why do we need to sell to them? So it's weird to me that we're selling to them, and that we want to. I think Trump wants to because he wants the 15% that Nvidia is being extorted to sell those chips. So, but I don't think China's a buyer. So I think the market is sort of misinterpreting this type of move. But again, we'll have to we'll have to keep an eye on that moving forward. But I'm just surprised Nvidia is up every day, even with a weak Nasdaq. It's green today, which is surprising. Um, I trade a lot of Tesla. That stock doesn't make any sense to me. Like, it was really bad last week, and this week it can't go down, and it really hasn't moved a lot, but it's up 10% since earnings. So, I think that's an interesting one to look at. There's a lot of stuff out there that's interesting, but I would keep an eye today, you know, on the bond market, creeping a little bit higher. But I don't expect, I don't know. I mean, what's going to really move us? I know we don't really need anything to move us, but what's really going to move us out of here? That's the question, you know?
That's a good question. And look, you're saying slow down. I'm just observing what's happening under the index. I just I want to show you what I'm talking about. The rotation that I'm seeing. First of all, whenever I see like massive rotation, it typically means like the market is needs a breather. But what I'm seeing is like this index here, the Selective US AI Agents Index.
Hmm.
So the AI agents were supposed to be like the big driver, the next trade of AI, right? It was going to be okay. Inning one is your build out, Nvidia, AMD, all that.
Hmm.
The the next one is supposed to be your software companies that use AI and your SaaS companies like ServiceNow. So here, take a look at this index. So this is that index against the Nasdaq, and although they've been trading together, there's a pretty interesting divergence at play. And then one level even deeper, um, the chart on the bottom panel is the spread. So that spread topped out like a week before the market topped out in February, and that spread has been dropping ever since. So these AI agents, all of these AI related stocks, like ServiceNow, here I'll show you a chart of ServiceNow as an example. I mean, they've been weak. It's not just ServiceNow, it's stocks like Datadog, which I'll pull up here. All of these stocks kind of look the same and they all fit into that agentic AI sector. And all of those have been trailing. This was supposed to be the next point of leadership in the market. And so that's one thing. And then, I mean, here now they're just going in separate directions. The NASDAQ won't drop and underneath it, you have stocks like this extremely weak. The other thing, this entire rally, okay, and you know that I've been bullish. I've been trying to ride that momentum. I just think that momentum needs a little. We got to see what they're made of here because this entire rally, this is the Goldman Sachs Retail Favorites Index. Below is the Goldman Sachs Non-Profitable Tech Index. These are the, when we talk about retail not selling, here it is. I mean, this whole rally has just been driven by these types of stocks. So that's what I'm looking at. It's just an example of
Right, but the question is, those are really good indicators, and especially the non-performing indicator. But the question is this the consolidation before the next move? Like, it's very funny to me. I know I focus on Palantir. I was really negative on that stock. I'm still very negative. I'm trading it a little bit the other way for a slight mean reversion. If it doesn't come up, we're going to hit it again. But like, you got Jimmy Cramer coming on TV at 185 saying it's going to 200 with no regard for risk or anything, just following crazy momentum, right? And then the stock comes in right now, $18. It's nowhere near, 200. It's closer to 150, basically, way closer. And the guy doesn't say anything. And then when the stock goes to 140, he'll tell you, oh, you should get out.
on
Right?
your
So those are the things that worry me more than those, you know, indicators that you're looking at. It's just the blatant disregard for risk and taking profits, which we've talked about on this show many, many times. No one is going to sell. No one will sell Palantir at 150, 140, 130, 120, 100. They will not sell it. So, obviously, the stock is completely overvalued. Okay. We're just trading it, we're borrowing it for a minute. It's not really working out, but we caught a good move on it on the downside. But the question is, like, I think people will not take profits. That worries me more than any stat that you're showing. If you said to someone, "Hey, I'll give you 200 on Nvidia right now," and you can't trade it
well,
again in 2 years.
that was literally the stat because I showed uh, the Goldman Sachs Retail Favorites Index. That's like the number one thing that's been driving it. I mean, that what you're saying that they don't take profits, that's embedded in that indicator.
Yeah. I hear you. But my thought is, um, really, um,
And
I
they're getting
just,
confident. That's what worries me is that they got confident. When I turned like bearish, look, I just think that we need a pullback. But I'm seeing all this under the index, and then I'm just taking a sample of all the people that contact me, all the people that contact you, and wouldn't you characterize them as overly confident? Like last week, Ethereum is at its high. I'm getting texts and calls like, "Hey, I'm getting into Ethereum." My question was, "Have you ever traded it?" No. Then why are you calling it a generational wealth opportunity? Like,
no,
and
everything. Listen, the generational wealth opportunity actually took place, and where it took place, believe it or not, is in the top 8 stocks in the world. Okay. Never in the history of the market, okay, has there been, think about it. You buy Microsoft and you triple your money. It's the second largest company in the world, and it's tripled. Obviously, Nvidia is the largest company, and that's quadrupled times 10. These are wealth opportunities. I mean, crypto is a gambling game, with very low market cap. Okay, the market cap, listen, Nvidia added 4 times the entire value of crypto in the last 2 years. Okay, it's gone from a a $1 trillion company to a 5 trillion or $4.7 trillion company in 2.5 years. That's the generational wealth opportunity. This crypto is gambling. Okay, a guy's buying one coin, hoping it goes up, like Doge, 500%, and they can make real money. They're obviously, from the beginning of crypto, there's been generational wealth for people that believed in it. And again, we didn't buy it because I had to buy it on a zip drive and keep it in a drawer in my house. I didn't feel very comfortable about having millions of dollars on a zip drive. But the people that did created generational wealth. There will not be generational wealth created in crypto. I shouldn't say that. There is not going to be generational wealth ever again created in Bitcoin. Not generational. There was generational wealth because the thing went, when we looked at it, from 800, to 121,000. Eric, if the thing doubles, it'll go to 250. Doubling is like a joke to these people. That's not enough. So the generational wealth opportunity in Ethereum and in Bitcoin is pretty much out of the realm. And the reason why they're buying Ethereum over buying Bitcoin now is because it's cheaper. It's only at 3,000. What is it? 3,500. Where is that thing? It's where is Ethereum? What's that?
4,300.
What?
4,300.
Right, so it's $4,300. It's a lot easier to buy a decent amount of that than buying $120,000 for one coin. So they're now running to Ethereum and all these other coins because they need to double and triple their money, and there's literally no chance to do that in Bitcoin. None. It's going to take a long time to get Bitcoin to 250,000, I think. So that's why you're seeing this speculation in the littler coins. And, literally, the entire crypto market is worth less than the top 10 stocks alone. But that's a different market. What's been incredible about our market is that generational wealth has been created in Nvidia, Amazon, Microsoft, all of the 7, 8 horsemen, Oracle. So that's, those stocks have doubled, tripled, quadrupled, even more. And that's where the generational wealth has been created, in, strict investing, basically not index investing, because, that's done well, but not anything. Like the S&P in the last 3 years is up, what, 45, 50%, which is insane. But if you bought Nvidia, you made 20 times your money. So that's what I'm seeing here, is people are going there. But I want to touch a little bit on macro and go through it. We talked about bonds a little bit. They're ticking up in price, down in yield slightly, probably holding to tomorrow's Fed minutes. I think we're in agreement that we think they're going to be a little bit dovish, meaning, showing that they're really interested in cutting rates. Again, the PPI isn't in that number, but I don't think that changes the complexion of this cut, which is at 83%. Looking at currencies, yen not really moving, dollar, euro around the same place, and British around the same. Dollar hasn't picked up any strength. I don't know if you're seeing anything there. We are short the euro and long the dollar against the yen. But, we haven't come to either side, meaning we haven't been in a full profit scenario and we haven't been stopped out. So we're sitting in the middle range there. Gold still looks to me as a no trade. It's been sitting for like 3 days, here. And oil is down 1%.
Silver has been interesting
What has
last
been?
night. Silver has been interesting last night. They both dipped pretty good at the future open, and trading at at the highs today. So let's
I
see.
don't know. Silver's a crazy cowboy market. That thing moves 1%.
Yeah, I was actually thinking that it's such a piece of junk. It
Yeah.
it could move.
Well, let's talk a second. I don't want to peacock or celebrate my winning trades, but oil. You know, you were making a decision before. It's now,
What's great
ticking.
about you? You were so wrong on oil yesterday. I didn't give you one call. I didn't say anything.
Why? Why was I wrong?
I'm wrong on oil, and let's hear
How
the
was I wrong?
peacocking.
I made money in oil yesterday. I'm in oil, I'm in USO, dude. I'm not in oil futures. I'm short USO call spreads. Okay. And basically they didn't not work yesterday. I made money on them. And now today they've imploded. Okay. So I'm doing just fine. You're looking at a 30-cent move and trying to call me up. The
I
bottom
didn't call
line
you
is,
once. I didn't
dude,
call you once.
we're kind of at the lows of yesterday. So the question is, how low do we go? I mean, I don't, what I'm saying to you is, what are you seeing in this market that's getting you bullish? Like, it can't be
Um,
price action.
Look,
We're on the
I
way of
got
the
in
move.
yesterday. I'll tell you, and I said it yesterday. I got in because I thought first of all, I thought a lot of people went short, including you, on Friday, anticipating free oil from Russia, which didn't happen. So as soon as that premise goes out the window, I'm anticipating some short covering, which I think we actually saw because
I,
being what do
dude,
you mean?
but time out.
Being wrong.
I appreciate what you're saying, but price is 100% of what the action is, and the price action. Okay, so you had a little short covering, and now we're making a lower low. What does that tell you? How can you be bullish in
Probably
this?
get out of my longs today. Oil's in
Dude,
the number
stop. I
red
want you to
line.
stay in so we can go lower. But the thing actually, as we're on the air right now, is ticking the low of the day. Dude, this thing seems on a beeline to $60. Again, the beeline might not be that fast, but it might accelerate here. So be careful. But all of the things that you're saying make, as a trader, make a lot of sense. Okay. But it actually makes sense for the other side of that trade. So, like you said, they had this meeting. They thought Russia was gonna, I don't know who thought it, but they thought
You
maybe
did,
the war.
literally you.
No, I thought that it was out
We were
there.
going to get free oil.
Listen, did you hear the thing with Trump talking to Macron and basically saying on a hot mic that Putin will do anything he wants, that he wants to make Trump happy? I mean, so all I'm saying is they'll do whatever Trump wants at this point in time. So I felt
It
like
looked
that.
like Putin sent his body double to that meeting in Alaska.
Well, you know
It
who
was weird.
used to have that body double? Saddam Hussein used to have like a literal two or three fake Saddam Husseins. It was like they didn't know who the real guy was. But no, getting back to understanding the dynamics of the trade, or whether this is oil or any trade, here's how I look at it. So like you looked at it like, hey, it didn't happen, so they're short covering. And I'm looking at it
But
differently.
also, there was another thing. The structure of the forward curve isn't, to me right now, isn't telling me oil is going to collapse. So
Okay, I don't know, dude. It certainly looks like it's not going higher. Okay, everything looks like it's going a lot lower. And if we break 8150, I mean, it could get very interesting. We will be adding to our position short there, just so you know. Anyway, what I'm trying to get to,
APR joined
you
you.
keep,
APR joined.
can you let me talk about the dynamics of
Of course,
understanding the trade, please, for a second? Okay.
of course.
So here's the way I look at it. So yes, you are right. People were probably positioned short over the weekend thinking there'd be a deal of some sort. There was no deal, but the price action actually was lower overnight, came back and was slightly higher, like 40 cents, but it didn't accelerate to blow. Listen, it didn't blow me out of my short. So it didn't blow anyone out of their short. It wasn't a big enough move. And then the price action didn't hold and didn't show itself. So, like you said, it almost works to the reverse. So, anyone who was short that had, diamond hands or weak hands, basically covered and got out. And now the market is basically, held with winning shorts like we are right now, where we don't have to get out, or bad longs. So that's how I see this market. Like, to me, the price action was telling me that the market wanted to trade lower. The question is, how long is the market? Is the market long at, if we get to 6150, which is lows of the entire move, does that create stops in here? So, right now it's like slow action down, you don't see anything going on. And people are lulled in oil right now because it hasn't really moved a lot. That it's been, obviously during the Iran thing in July, it ran crazy up to like almost $80 a barrel. And that was off of geopolitical. But really, we haven't had like any real downside. I wouldn't call it panic, but just people puking it out. So maybe we get that here. No one's had to sell pretty much all year. But you want to know what? Oil's down 14% for the year. It's not having a good year. So anyone long oil is destroyed, right? Wouldn't you agree with that? I mean, no one's making money long oil. It's on the dead low tick. So those things to me is you wait for the stops. But when you want to get inside the forensics of what you were talking about before, I look at it a little different. I say, like you said, maybe there was a short base, but the short base didn't have to move or do anything. So that made it easy for this thing to come down. And, listen, Trump is very focused on having oil below $60. You have to agree with that, right? No, he doesn't want oil lower.
I mean, I haven't heard that. Everybody wants oil lower, so
Why?
I think that's
No, I think he wants oil lower. He talks about gas prices almost all the time. He's literally quoting bad quotes on where, gasoline is, and he wants gas under $2. So when he gets that, he'll tout it. So we'll see where it goes. Again, I don't want to harp too much, but that's been good. Bonds, I don't know what to do in bonds. Do you hold the long into the minutes, which I think will be, you know,
one
basically,
of the minutes tomorrow, right?
yeah,
Or today.
tomorrow. But
He's
yeah,
focused on the minutes. That's like five handle move on the S&P Max.
I'm not trading the S&P off. I'm trading bonds. I do not have an S&P.
Also didn't really move from that.
I have a long bond position that I'm up small on right now, and I'm deciding what to do. I mean, the problem is what's happened in our market, and it probably holds true until after Labor Day, um, is um, is the bottom line. Nothing really going on. Like today is actually, surprising. S&P down, seven handles, which isn't a lot, but yesterday I don't even what was the range yesterday? It had to be less than 20 S&P points all day.
It was like 1 point. We had a 1 point range yesterday.
One, what do you mean 1 point? One spoo point? Dude, you're out of control today.
It felt like that. Hey, it felt like that.
Dude, I want to know where you're stopping out in oil as it's dropping even more.
Oh my god!
Never,
It's
dude.
totally,
You're never getting out.
I'm gonna get. I don't know. Let's see. I mean, I'm at break even. I bought it at 61.92. So
Dude, it's 61.74 right now, live.
yeah.
So whatever. You're gonna have to make a decision as I go to smash that market later, if it fades. But I do think we're gonna have under $60 oil, but I don't want to spend any more time on that. We're getting close to the opening. I want to sort of get your thoughts. I don't know if you're looking at any stocks. You know, uh, one stock that I traded, which is sort of outside my wheelhouse, is this stock called Bullish. I don't know if you saw it. It was an IPO that came public. It came public at like $38, opened at like 80, went to 120, and now is $61. We were playing that a little bit from the short side, and we're gonna be buying that a little bit today if it gets hit just for a mean reversion trade. And we'll see. We'll see what happens. It's interesting. Legit, like all of Europe is up today. Um,
Yeah, I saw that.
and we're down. So that's a little bit of a divergence. Our bond market is not up a lot, but stable today, and our market is down. So I don't even know, what people are looking at to trade today. You can't, you're not seeing really anything.
Intel is up 4%,
Yeah, the government's buying it.
and now SoftBank is getting
I know,
into the act.
and the government. Like, what does Trump want this to be the chip company? Wouldn't that be negative for like Nvidia if they're investing all this dollars? Like, that's a direct competitor. I mean, they haven't done a good job in the last 20 years of competing, but that's a competitor for sure. And why wouldn't that be negative for other chip companies? AMD, Nvidia, that SoftBank is getting involved and they're going to try to make this thing a monster. But that's an interesting thing to look at. It's funny that stock, when Trump said to fire the CEO, traded under $20. And then 2 days later, he said he liked the guy and they're going to try to buy a stake in the company, which why the government needs it, I don't know. Um, what do you think of UNH here?
Um, look, I missed that trade, but from here on out, like the difference between UNH and any other retail stock is that UNH was never a retail stock. What got it up was Buffett and other hedge funds got in, and now retail is into it now. Right, they're jumping on they have jumped on the bandwagon. They're in it, and the hedge funds are in it. And here's the difference between hedge funds and retail traders. Hedge funds take profits. Hedge funds sell. So I wouldn't want to get in right now. I don't think it's going to collapse either. I think it's a strong base. So maybe like an iron condor into September. I think anybody thinking about getting in, should kind of relax,
Hmm.
uh, let it come in a little bit, and then buy it. I'm not sure momentum just keeps going like this with it. Some of these funds are definitely going to be taking a nice profit on it. It's up a lot off its lows, but it's also down a lot from its highs.
Oh,
I
it
I
dropped.
do think again the
It,
bottom is in.
I mean, I would think so, but and then also what I would say that's very, very interesting. People are looking like Warren Buffett bought it. Warren Buffett isn't buying anything. He's 96 years old. Okay. He's not, I don't think he's buying anything. This is the guys in his shop, Jane and all these other guys um, that are buying it. So it's not, listen, it makes sense in the sense that the stock was $600 and now it's 280. That makes sense. But the business itself has big issues. Okay, big issues. It's, you know, you're mixing healthcare with money, and that's never a good thing, as you saw when the guy that was the CEO got shot and killed. People are very, very angry. Insurance is a dirty word, and you got to be very careful with that. For me, I think selling a little bit of upside might not be a bad idea. Call spreads. The only problem is I kind of looked at it yesterday. There's not a lot in it, so it's hard to really see a great trade here. Maybe it goes a little more, but it looks like it's run $50. It's basically up 17% off of just the guy buying it. So that seems like a lot. So keep an eye on that one. Palantir still going lower. I want Jim Bob Kramer, the bull, telling everyone to buy it and get long at 188. I want to see when he's going to change his mind. And that's really it. I expect a quiet day. Hopefully, we get a little bit of downside and not expecting a lot. And what's interesting is Look at the divergence on the opening. The Dow is ticking straight up as we've been on the air. It's now up 100. I'm trying to figure, is it Boeing? What is the component that's up so much? Something's up. So something's up. It's not Boeing. One of the Dow components is up. The Dow is up 100. Nasdaq is ticking lower and lower and lower. So we got that trade going. Nasdaq down 25 bips and Dow up 22. So keep an eye on that spread. Like you said, a lot of flip and flop. Expect it to be quiet. Keep an eye on oil and the bonds today. And I don't know if you want to close on anything, but we're really close to the opening, about 10 minutes to go. I hope we set everybody up for today, and I hope people got something from our podcast. And that's it on my end. I don't know if you have anything, but I'm pretty much closed up.
Yeah, market looks complacent with a straddle at 19 or 20, wherever it is right now. I would wait. I'm waiting for a pullback. I'm waiting for a pullback to sell a put spread. I think 64.10 should hold. I think I could, if I wait a little bit into the day, wait for the pullback, get the premium up on that 64.10.
Yeah,
I'm
but
looking to.
you said dude, you said you're bearish, so you're waiting
Yeah,
to sell a put
I
spread if
have
you
call
go
spreads
down.
open right now. I
Okay,
have call spreads open right now. I'm just waiting for a pullback to get some premium into that 64.10, and I'll probably put in a limit order actually on a 64.10,
okay.
maybe 63.95 put spread, and I have very aggressive call spreads open. So
Okay. All right. Well, I wish you luck, and we'll see what happens tomorrow, and we'll be back to everyone tomorrow with our insights, updates on positions, thoughts, etc. And expect a little bit more tomorrow. We got the Fed minutes, and I wish everyone great trading today, and enjoy the day.